Hey, good afternoon, everybody. Earlier today, I was doing or trying to do a Zoom call with a financial planner by the name of Sean O'Toole, and he had asked me to put up some content on business valuation and how I could give quick valuation to his clients so they understand where they sit with regard to their business's value and what it will potentially sell for. So he's trying to lean forward in the saddle, work with their CPAs to establish what their business's value is. And one of the common problems we have when people come to us to sell is they have not prepared, or they get advice from people who flippantly give them numbers or baselines that are not realistic, and then that's a whole cascading series of problems. So we've done a number of videos, and if you go to our YouTube channel, we have a bunch of Q&As or frequently asked questions with how valuation's done. Now, one of the cool things about Florida is we're the only place in the country that has an active MLS that records actual sold data. And there's a huge sampling of data. Now at Transworld, we have our own database because we're the largest in the country. But the BBF system that you're looking at right now is actually pretty cool because we can actually give you real statistics by category, by region, by business type, by revenue size, and by cash flow. So we're going to do seller's discretionary earnings method or owner benefit method when we go through this exercise. And I'm going to do two different industries. So one of the things I always do when someone comes to me is, we review their financials. That is intended to identify if their accountant or they are preparing their books and records in a manner that is palatable for the market, for what buyers want, for what banks want, and if we hopefully can tweak it to get it financeable, which means eventually they'll get a higher number because the more someone can leverage dollars, the better off they're going to be for purchases. So I'm going to demonstrate something for you right now. So the first exercise I do is I show them what's on the market. So I try and focus it locally. Believe it or not, markets and regions are localized. And very few exceptions are things kind of binary, like, hey, a construction company sells for the same in Georgia as it does in Florida. It doesn't. Things are different in every market because of taxes, because of economic baselines, because of growth trends, et cetera, et cetera, et cetera. So we're going to look at a local market, which for us is the 5 or 6 counties that make up Central Florida. Mine's a little different because I do cover Brevard. And then we'll just do a standard, let's just do a standard, I don't know. Let's pick something out of the blue here. Flooring business. Let's pick a flooring business. And we're going to pick a flooring business with gross sales of anywhere between $1 million and $500,000. Now, why the spread? The spread is because prices are different, margins are different in different types of flooring, and we want a decent sample. So you're going to see down here, tax return P&L annualized, owner to prove. This is important because the better the records you have, the higher the multiple. If I was to do this exercise several times with you, and I don't have time for it today, but you're going to find that if the financial records are coming from tax returns, the buyers look at that as a safer investment. Therefore, demand is higher for that business. Therefore, the price is up. So, as a business owner, you want to have your tax returns and your P&Ls as clean as possible because you're going to get more people looking at it, and the buyers are going to compete for your deal. If you're playing games with your financials, you're going to sell for less. You're not going to beat Uncle Sam twice. You may beat him on the front end by not paying taxes, but when you sell it, you're not going to get the maximum price. So we're going to look at everything that's on the market in the flooring business presently in Central Florida. And there are nothing. Oh, that's interesting. Better pick a different industry. Let's pick construction. So here's construction. This is everything that's for sale in Central Florida right now. All right. Now, when we hear, you're going to hear this thing called multiples. So that sampling was everything with a tax return to P&L, owner to prove, annualized statement. There's a pretty wide swath. We're going to run the calculate the ratio button, and you're going to see multiples. Now, the multiples we're talking about is this column right here. List price to adjusted net. And you can see it's a wide range. Like this guy here makes $150,000 and is selling it for $1.2 million. Now, let me Under no circumstances is that business ever going to sell for that, nor is it worth that. Oh, here you go. The reason that multiple's out of whack is he's including the land in the deal. So when people see that, when they see that multiple out of whack, it throws the thing out of whack because the assets in the deal are exorbitantly high, specifically the real estate. So we're going to take that out as a sample to try and get it trued up. What are people listing at? And they are listing these businesses at 2.194 in that $1 million to $500,000 range. Okay. Now, as a seller, you want to be in the top 20% of listings. So if everybody out there is 1.8, 1.4, 1.5, 2.4, you want to be in that lower end. If you're the highest guy out there, and it's an apple and apple, comparison, you're going to get looked over for the guy who's got the same business price less. It's just human nature, and there's nothing you can do about it. Now, if you list in a manner where the business isn't getting exposed and all the features and benefits aren't being highlighted, you're even worse from a selling standpoint. So if you're selling a business, you have to price it correctly. You have to highlight your features and benefits, what makes your business better, the contracts, the employees, the tenure, your payment terms, is it bankable, is it not bankable? Those are all benefits. But the first thing a buyer looks at, money to price. It's human nature because buyers don't get this education level up front. They're usually halfway through it. Buyers are just as ignorant on the selling process as sellers sometimes are. So this is what's on the market. Remember that number, they sell for about they're listed at about a 2.194 multiple. So the question then becomes, what do they really sell for in that same price range? So we're going to go back. We're looking at the same geographic area, right? So we're trying to get as apple to apple in the comparison as humanly possible. By the way, pardon my dress. I'm at home in the COVID virus, and I'm trying to pump out as much marketing stuff as possible while I've got all this downtime, and I'm hoping this one's going to be valuable to people, brokers and buyers and sellers alike. So we're going back to construction, right? And we're gonna look. Were we looking at flooring? Yeah. All right. Same price range, right? So, what actually sold? Interesting. 9.96. This guy sold it up basically less than one multiple. He had an adjusted net of 165 and a price of 160. Probably not a good sample from an industry standpoint. So let's go back and look at something that's a lot more common. And let's do lawn care companies, right? And lawn care because they're simple, right? So lawn care companies, what do they sell for in Orange County, Florida, at the Main Street level, which is a business under 300 grand, right? So let's do Orange and Osceola as a sample geographic. Let's go down to your net income. We're not going to fill that in, skip that. Let's do a business with gross sales between 300 and 200. And believe it or not, that can be about the same in terms of equipment. And this is every lawn care company in the 7 years, what they've sold for, and what their multiples average were. So 2.5, 1.5, 1.7, 1.6, 1.84, 1.37, 1.9. You can see it's pretty consistent. So on average, a 1.5, the median was a 1.59, and year by year. Now, last couple of years there haven't been a lot, and that's because the industry hasn't been attractive. You're going to see a lot more of them sell in the more recent in the post-COVID world because the barrier to entry low and the consistency of the revenue is real. But the point of the whole thing is that the brokers all do this exercise. They all know when they look at your listing what your pricing should be. sellers, you need to ask for this data. You need to be asking for what's on the market. What do I need to do to be in the top 20%? What's that price range to be in the top 20%? How do my books and records look with regard to financing, and how do I make them look better? So that means you need to talk to us before you file your taxes. And ideally, the bigger your company gets, you should be talking to us 3 to 5 years in advance. And then finally, you need to look at what the comps are actual sold to get an apple to apple comparison. You can't sell your house for $150,000 over every other 3-bedroom Lennar with a pool. There's just no, there's nothing you can do to move the numbers up. In fact, you can sometimes overdevelop it. And in business, that happens too. Just because you have Mercedes-Benz trucks, or the nicest trucks on the street, or the highest, most valuable mower in the world, it's always going to come down to the cash flow. There are intangible things that drive value, but it doesn't change the law of physics and finance. So here's the point. Price it correctly, have your valuations done yearly, have your broker work with your accountant and your financial planner to help you prepare and maximize your dollar when you sell. Your business is an asset and has tangible value. So prepare in advance, get educated, and make sure your brokers, hell, they should voluntarily be doing this exercise with you. If they're not, they're probably the wrong broker. I do these for free. If you want a free valuation, give me a call, 321-287-0349, or visit my website at www.yourfloridabusinessbroker.com. Take care.